Welcome back to another episode of The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you, it cannot take care of itself. What's up today? Today we're going to look at McDonald's. Yes, the restaurant, yes, the stock. Mickey D to Americans, MacDo more in Europe. But to investors in MCD and McDonald's, nothing but 3 stars of Michelin pure delight, maybe not for the food, but for the return that investors have enjoyed in the last 10, 15, 20, 30 years. Every year, it seems, you can look at this chart, every year, it seems that McDonald's turns in a very impressive result. 2008, many stocks were down 40, 50%, not McDonald's. The numbers at McDonald's, they're a bit staggering. Company's worth about $93 billion. The stock trades at $98 a share. So there's many things to love. You might love the food, you might not love the food, but you've got to love the performance of the stock. But the question now for our viewers is, do you want to buy it, do you want to hold it, or do you want to sell it? And there's compelling reasons for all three. Let's give the case to buy the stock. The operating margin on McDonald's, basically the return that the business generates, is almost 30%. The return on invested capital, 17, 18%. It's an extraordinary number. What goes into McDonald's? Well, we all know potatoes, salt, sugar, ice, buns, meat. And what they turn out is an acceptable, some say very good, some say great product. But the fact of the matter remains that the margins on this business command huge premiums in the stock market. So what are we talking about? We're talking about price to cash flow is something like 14 times, very healthy. And we're talking about a growth on the stock, a compounded growth probably well over 10% per annum in the last 20 years. Outstanding. But it is expensive, and if you don't like paying a lot for a stock, and 20 times earnings would give me indigestion, that's going to give you a little bit of a pause. So for the people who own McDonald's stock, they're not leaving, they're not getting out. But the people who say, is it too late to get in? Might not be too late to get in. The business has had some hiccups, has had some setbacks in the last couple of years. In China, they closed down some restaurants. India, I believe, part of the U.S., some of the non-performing assets in the constellation of McDonald's. But that isn't really going to kind of set them back. $27 billion in revenue, a strong cash flow, healthy margins, a dividend yield of almost 4%. So would I buy it? Would I sell it? Would I hold it? I'd certainly hold it. And I think if I was looking to take profits somewhere in this market, I might sell it. Would I buy it? Probably not at 20 times earnings. At 15, probably yes. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.